Hey, this is Justin with DayTradeTheMarkets.com on February 7th, Thursday. A lot of markets moved pretty nicely today, and I wanted to look at a lot of different markets and really focus in on what we call our first building block, which are the strong and extreme relative aggression bars, just to show you or help you see how these, especially what we call our level 3 bars, really help you stay on the right side of the market and can help give you warning when a big move is potentially imminent. Just to give you a little bit of background here in 30 seconds, our software does a lot of different things. It has a lot of different components. We look at each of them as each component as a piece of the puzzle, and the more pieces of the puzzle you have that come together, the more clear your understanding. But the one I want to really focus on in today are these relative aggression bars. So in other words, I'm not going to have the high velocity moves or the real-time support zones or the deceleration and the divergence indicators or the filter, and I'm not going to talk about bigger picture analysis right now. I'm going to take all of that off the chart, and I'm just going to talk about these relative aggression bars, because those are what we call our first building blocks, and those are really giving you quite an edge in terms of what's going on in the market. And just a little bit more information about what those are. This is looking at order flow as well as some other ideas like velocity and some volume and range components as well. But we're really looking to see which side, buyers or sellers, is more aggressive than the other, because it's aggression that moves the market. So we're looking under the surface at the actual order flow. We're not just looking at some technical indicator. We're not just looking at price action. We're trying to understand what's going on beneath the surface, because that's what actually makes price move. So let's figure out what makes price move so we can better predict what's going to happen. And so what these bars do is they tell you, number one, which side is more dominant, buyers or sellers at a given time, and then to what degree. Okay, so we have these level 1 bars. They're moderate buying and selling. Level 2, which are strong, and level 3, which are extreme. Now, level 2 and 3s don't happen all that often. It varies by market, but they don't happen all that often. So when they do, we really want to pay attention, especially to these level 3, or what we call extreme buying and selling aggression bars. And we know that when one of these occurs, especially if it's at the higher low of a day, but when one of these occurs, let's say it's a buying aggression bar, level 3, if there's follow through, if the low of this bar holds and then there's follow through higher, this market is 9 out of 10 times wanting to head higher, at least short term. Or if there's a selling level 3 aggression bar and its high can hold and then the low gets taken out, we know 9 out of 10 times this market's going to head lower. It's it's a bit of what we call the roadmap idea. And anytime you get a big move, it's almost all, I don't like to use always and nevers, but just about always a big move is going to be started with a level 3 buying or selling aggression bar. That doesn't mean every level 3 buying or selling aggression bar starts a big move, but every big move just about will be started with a level 3 buying or selling aggression move. So if you want to be able to hop on big moves, this is giving you a pretty good heads up that that's potentially imminent. So I mean, for example, here's the I want to look at 5 or 6 or 7 different markets today, because we had a lot that moved. Here is the euro. Have it on a 3-minute chart. This would work on a 1-minute chart, a 60-minute chart. You could look on it a 30-second chart if you wanted to, if you really wanted to see, right down to the, as about real time as you can get. So, however you want to use this, you certainly can. And so again, when we have one of these major, here's a level 3 selling aggression bar, we ask ourselves, can the high hold? And this high was tested, and then can the low get taken out? And when we have that, and I like to, my general rule, it's not black and white, but do you get a full bar above this bar? And by full bar I mean not even touching. And you see we tested it a few times but didn't get a full bar above, and then we took out the low. And not only that, but we took it out on another level 3 bar that had immediate follow through, and another level 3 bar. Here's a level 3 buying bar that was rejected. So that's the same idea. So in other words, at this point, this is showing us that bears are just extremely in control of this market short term, and until we can get some follow through from a bullish bar, you can see we have a level 2, which is not the same as a level 3. Level 2 bar with no follow through. This level 3 holds, this level 3 holds, this one holds, this one holds, this one here holds. It's not until this bar on the low where the high doesn't hold and we start to get a little bit of buying activity that starts to have a little follow through. And then this level 3 buying bar, its low essentially holds. So again, it doesn't mean that buyers are taking over, but it just means that this pure wave of just outright selling has at least come to an end when this bar had its high taken out, and now we're in about a bit of two-sided action. Okay, so again, this is just the first building block. There's a lot of other components like the support resistance zones and decelerations and a lot of different ways that you can get into the market. You know, one of the ways we like when we're looking at these level 3 bars is if you get 2 in a row. You know, for example, it's what we call the sweet spot. Like here's an example where two in a row line up. You can see they overlap right in that point. We know that's a pretty good spot to be looking to get long or to get short. You know, so you know that, but there's 10 other ways to get on board trades. That's not the point of this video. This video, the point is to just talk about how these level 3, especially level 3 buying and selling aggression bars, are really telling you that there's extreme buying or selling in the market, and you need to pay attention. And if there's follow through one way or the other, you know, that's giving you a pretty solid 9 out of 10 type roadmap to what's going to happen in the near term. Let's look at another market. Let's look at gold. Okay. You know what? Let me just turn off the level 2s to make this even more interesting here, just to give you an idea here. So we just show the level 3 bars. And again, there's a lot of value in level 2s and level 1 bars. I just want to make this as clear as possible, and I've tried to make it really stand out here. And you can see early on here, level 3 bar with immediate follow through and just attracted more and more selling. And then it wasn't until this bar down here where we started to see some buying, you know, price at auction low enough to attract some buying. You know, this is an inside bar relative to this bigger level 3 bar, so we have to really ask ourselves, until this high can get taken out, we wouldn't say bulls are back in charge, but it's giving us at least a heads up. So if you were able to get on some of this move, it's giving you at least a heads up, you know, be on the lookout to be getting out. And then you can see you know, another level 3 bar here, buying bar, but it was you know, it's tested the high of this held, it bounced, and then we take out the high of this one on another level 3 buying bar, another level 3 buying bar, level 3 selling bar that's quickly rejected. So in other words, it's telling us at this point, you know, there was a heads up down here, but bulls have really taken over this market. Okay, now you can see there's a little bit of two-way action here, where we're having obviously some level 3 buying bars, but at the same time we're having really a back and forth. Here's, you know, there's really a battle going on, you can see right there. And so we know that whoever wins this battle, so to speak, and you can see finally that, you know, we took out the lows of these level 3 buying bars, the lows or the highs of these level, you know, 3 selling bars held, so we're going to head lower. Okay, so it's just, again, it's that roadmap idea that's the first step to find, you know, you want to be on number 1, identify which side's in control. Therefore, if you know which side's in control, and you know, for example, that bears have taken over, you know, you don't want to be looking to get long, and you want to be looking to get short. However you do that, you can use that with the current method you're using, or we have a lot of different trade entry techniques that we talk about. I mean, for example, here's another one of those sweet spot ideas right here. Okay, you know, another one right there. The one right there. So I mean, that's just one idea. Okay, let's have a look at crude oil. Not as exciting a day in crude oil, but again, you know, a little bit of a head fake off of the start. You know, we did get some follow through on this level 3 buying aggression bar. We want to ask ourselves, can the low hold? All, you know, bigger picture, but we did get a little bit of follow through. But then we started to see some level 2 selling bars creep in. We took out the low of this level 3 buying bar. So you can say, you know, bears are starting, they're showing some signs right in here. They're starting to take over, and you can see we really break out lower there. We reject this attempted aggressive buying move right here, so we're heading lower. And it's not, you know, this bar holds a bit and we sell off, but essentially, you know, at this point when this high is taken out, we're into some two-way activity. Okay, it doesn't mean bulls have taken over, but it just means we're into more of a consolidation where we couldn't get any more follow through lower. Okay, so hopefully that makes sense. Let's look at what have we not looked at here? Let's look at the Nasdaq. Again, this is a 2-minute chart, but you could use this on any, you know, any time frame you wanted. First structure here is a level 2 selling bar. Its high holds, but the first extreme structure is this level 3 selling aggression bar. Okay, so you know, even though we're in a bigger picture up auction, short term, it's showing us sellers are in control of this market. Again, here's an area where they overlap. Nice opportunity. Here's an area where they overlap. Nice opportunity. Here's an area where these two overlap. Nice opportunity. So again, that's just one of the many trades you can take. The point of this is, how do we identify which side's in control? And you can see level 3 selling bars coming in, another level 3, another level 3. This high holds. Here's another level 3. Oh, well, we auctioned low enough to start attracting some buyers, so we need to have a little bit of our, we need to say our alert is up. If we were on the short side, okay, let's be careful that this could be coming to an end. Let's see, and this bar got immediate follow through. This high got taken out. So you can see it does. Again, it doesn't mean bulls have taken over. They ended up doing that, but it doesn't mean that at the time. It just means we're into more of this pure wave of selling is over. Now we're at least two-sided until we can see other evidence. Okay, and you can see late in the day we had a rally higher as well in the Nasdaq. Let's see what else. Let's look at the not a very exciting market, but bonds. Same idea here. Level 2 buying aggression bar, level 3 buying aggression bar. And again, can the low hold? It certainly was tested, but we did not have a full bar below, and you can see we just started heading higher. Here's another level 3 bar. It wasn't until the very high of the day where we started to get some follow through lower on a selling bar, and you can see again that's where we kind of started some two-way activity. This pure wave of buying was over. Now we got into a little bit more of a consolidation type of a phase. Okay, let's look at the what else is there? Here is the ES, the Emini. And this is again is a 2-minute chart, but you can see the first structure, level 2 selling bars, then we break lower on level 3 selling bars. Here's 2 in a row again, so where they overlap right there, interesting opportunity. And you can see, pure wave of selling. It's not until we get a few heads up that the pure wave of selling is over, some buying starting to come back into the market. Now we have this back and forth. We start to see some follow through on some buying activity in here. Okay, so again, this is just the first step of but it's the most important step. If you can stay on the right side of the market, you don't have to be perfect with your trade entry. You're in flow with the market. You're swimming downstream, not upstream. So that's the idea. So again, I've thrown on the support resistance zones here, decelerations. So this, you can see there's other information you can work with, but the first building block that we like to call it, or the first step, is understanding these aggression bars, and they can really help you stay on the right side of the market, whether you're using this as a standalone or you're looking to just use this as more of a decision aid. And that's a great way to use this as well, as a decision aid. In other words, if you have a method that you're already using, and we hear about this all the time from people that are doing it this way, they might be doing okay with that method, but this really takes it to the next level, where if they have a trade set up in whatever method they're using, and they're seeing some aggression bars confirming this, or it's trading against a support zone or a resistance zone, that's giving them that extra 5-10% confirmation edge that really takes that method over the top and increases their edge. And other people, or another way you could look at it is, you have a trade set up, and instead of going against the grain, this is giving you kind of the red flag or a think twice type of an alert. So if you think about it, if you can just stay out of one losing trade per week, that's going to greatly increase your P&L by the end of the month, end of the year. So I'll stop talking now. It's getting be a bit of a long video. Everyone in the Northeast, certainly stay safe. It looks like there's going to be quite a blizzard coming through this weekend. But if you have any questions about this, let us know, and we'll talk soon. Stay safe if you live in the Northeast. Take care.